moving fast isn't enough. You also have to move smart. Business analysis gives entrepreneurs and leaders the ability to make informed strategic decisions. It's the process of identifying what's working, what isn't, and what to do about it. It connects the dots between financial data, market conditions, and operational performance. Business analysis matters because businesses are more than just products and services. They're living systems constantly interacting with customers, supply chains, competitors, and economic trends. Without a way to analyze all those moving parts, decisions become guesses. For startups, analysis helps build a solid foundation for established businesses. It reveals where to optimize. And for those aiming to scale, it uncovers the risks and resources needed to expand with confidence. Done, right? Business analysis doesn't just show you how to survive. It shows you how to thrive, understanding debt versus equity and business. Raising capital is a pivotal moment for any business, and choosing between debt and equity financing is more than a numbers game. It's a decision that shapes ownership, risk, and control. Debt financing allows you to borrow funds often from a bank or private lender with an agreement to pay it back over time with interest. It's straightforward and lets you retain full ownership of your business. But it also adds financial pressure, especially during periods of low revenue. Equity financing means selling a portion of your business to investors in exchange for funding. This doesn't require repayment, which gives you more cash flow freedom. But it also means giving up a slice of control and profits. Each method has its place. A business with strong and predictable cash flow may handle debt comfortably. A startup still in the early stages of proving its model might lean on equity to reduce early financial stress. And some businesses benefit from a hybrid approach using debt to fuel expansion and equity to bring in strategic partners. Knowing the right mix begins with clarity. Where is your business today? Where are you trying to go? And what kind of financial structure will support? Not strain that journey? If you're unsure, a tailored business analysis can shine a light on your most efficient path forward. You'll find a free one linked in the description or comments. The impact of financial decisions on cash flow. Cash flow is more than a financial term. It's your business's ability to breathe. Every funding decision, every investment, every operational expense affects your cash flow. And cash flow is what allows you to pay employees, keep suppliers happy, market your services, and innovate for the future. Let's break it down. When you take on debt, you're committing to fixed payments regardless of whether your revenue is booming or dipping. That predictability is a double-edged sword. If managed, well, it provides discipline. But if ignored, it can choke flexibility. Equity financing eases that tension, no monthly payments, but comes with the expectation that you'll grow and eventually deliver returns to your investors. A good business analysis doesn't just show you how much you need to raise. It shows you what your cash flow can handle. It answers questions like, can you afford a new hire? Will expanding your location boost revenue or overstretch your resources? Is now the right time to reinvest profits? Making financial decisions without understanding their effect on cash flow is like setting sail without checking the tide. Short-term cash flow strategies for long-term success. Sometimes your business doesn't need more money. It just needs better timing. That's where short-term cash flow strategies come in. They help you better align when money comes in with when it needs to go out. One powerful tactic is invoice factoring. If you're waiting weeks or months to get paid, you can sell those outstanding invoices to a third party and receive immediate cash. Yes, there's a fee, but it may be worth it if it keeps your operations running smoothly. Negotiating vendor terms is another overlooked move. By extending your payment timeline from 15 to 30 or even 45 days, you give yourself more flexibility without increasing debt. Inventory is another area where cash often gets stuck. Carrying too much stock ties up funds you could be using elsewhere. Reviewing your inventory levels and matching them more closely to demand improves both efficiency and liquidity. For those needing a more formal backup plan, a business line of credit can provide access to cash on an as-needed basis. It's like a financial safety net. There when you need it, invisible when you don't. Lastly, consider offering small discounts for early payments from customers. A 2% discount might sound like a loss, but getting paid 20 days earlier can be a major win for your cash cycle. The key is to stay proactive. Don't wait for a crunch to start optimizing your flow, tools, and techniques for effective business analysis. You can't manage what you don't measure, and you can't improve what you don't understand. That's why smart tools are essential. Start with financial ratios. These quick calculations, like profit margins, current ratios, and return on assets, give you instant insights into performance. They reveal whether your revenue is growing faster than expenses, whether you have enough liquid assets to cover liabilities, and whether you're making the most of your investments. Next, scenario planning. It may sound complex, but it's simply about asking, what if your sales dip by 20% next quarter? What if your biggest supplier raises prices? What if you double your ad spend? By modeling out these scenarios, you prepare, not panic when change comes. Another core technique is trend analysis. By looking at your performance over time, you can identify patterns. Are your slow months consistent? Is your growth seasonal? Do customers return at predictable intervals? Market analysis adds another layer. Who are your competitors? What are they doing differently? What's working for them that you might try in your own way? The best part? These tools aren't just for large corporations anymore. Many of them are affordable or even free and easy to use once. What to look for. Implementing a balanced financial strategy. Strategy isn't about doing everything. It's about doing the right things in the right order. A balanced financial strategy doesn't just focus on growing revenue. It also considers debt, equity, risk, and timing. It's about aligning all financial levers so they work in harmony. Step 1. Assess your cash flow stability. Can you handle fixed debt payments during a slow month? If not, you may want to build more liquidity. First. Step 2. Match financing to the goal. Short-term cash gaps. Consider a line of credit, long-term innovation projects. Maybe that's where investor capital makes sense. Step 3. Blend debt and equity based on your business stage and growth plans. Too much debt can box you in. Too much equity can dilute your ownership and future earnings, and always avoid financial overburdening. Growth is exciting, but overextending too soon has sunk many promising businesses. If you want a clearer picture of what balance looks like for your unique business, there's a free business analysis link available in the description and comments. It's not a one-size-fits-all template. It's tailored to where you are and where you want to go, embracing business analysis for growth. Here's the truth. Business analysis isn't an extra task. It's the foundation for every smart move you'll make, from financing decisions to growth strategies, from hiring plans to market entry. Everything becomes easier, clearer, and more effective when it's based on insight rather than instinct. The tools are there. The data is already in your business. What matters now is how you use it. Let business analysis become your guide. Let it challenge your assumptions, sharpen your strategy, and open new possibilities. The most successful entrepreneurs aren't necessarily the ones with the biggest budgets. They are the ones with the best understanding of their numbers and the courage to act on what they reveal. If you're ready to take that next step, even if it's just to get a better grasp of your current position, consider the free business analysis waiting for you in the description or comment section. It's a small action that could lead to your biggest breakthrough yet, because growth doesn't just happen. It's built one informed decision at a time.